guys, welcome back to Markets with May. It is March 8th, and as we always say on this is entertainment. Past performance is not indicative of future returns, but we do give a whole lot of information from my research process from all of us here at Gurula. So another wild and crazy day in this markets. I mean, if I didn't know better, I feel like now that the retail investor is in the market, powers that be are just trying to make this really, really exciting. But quite frankly, I don't purposely go on roller coasters every day, so this could calm down a little bit, and I still think I'd be really enjoying myself just fine for the powers that be out there. Let's go through all of the stuff that we typically go through. FinViz, definitely need to touch base with them because I am a huge fan of what they're doing in the way of data visualization of the market. And this whole thing was read when I woke up this morning. I was like, okay, repeat of yesterday. And then we've got a huge market correction on a number of names, particularly in technology. Now, I would say it's really case by case because in some cases, you got to realize that a market correction, if it's down 3% and then it's up 3%, it's still technically down. That's this geometric returns. It's something they teach you hardcore within financial services to truly understand that dynamic. But in some cases, like Google, et cetera, it's back in the 3,600 level. And as you know, we talked about put spreads, bull put spreads, but trying to get them back, way back. Don't try to be too excited. Don't try to be too exciting. But the volatility is going to persist here for a little bit of time, for sure. And there's lots of reasons for that. But I want to go through some of the things that are just not true a little bit today. And I find that unfortunate because I think, right now in this place of this time of uncertainty, you just don't do anyone a favor by giving misinformation, and yet it's abundant out there. So let's go through it a little bit. Economic news. Today we had trade deficit that came out. I'm going to go through some of these because really, I don't think anybody's really focused on these right this minute. Wholesale inventories are a little bit higher. I'm going to try to have those numbers for us a little bit later in the week. But consumer credit came out. It's very mixed in the sense that the computation itself is adjusting for different time horizons, so it can better reflect the retail, the changes that have happened in retail lending, so to speak. So it does look like the consumer's still very strong. Maybe balances are a little bit weaker because people paid down debt. But largely speaking, this was a non-event yesterday as far as that goes. And there's nothing that I usually can pull something from this for the banking sector, but I really couldn't pull anything from it yesterday given the way the numbers came out. We still have CPI coming out later this week, and it's going to read very significant inflation. And if it doesn't matter because people are going to come out and say very significant inflation because there's very significant inflation. And it's all coming from this change in world order that we got going on where we are antagonizing anyone that might be able to bring inflation down and in a lot of cases for good reasons, in other cases maybe not the smartest thing to do. But let's go through that a little bit. Obviously, the oil news today out has driven the price higher to 126. And the interesting thing about a U.S. ban on oil is that we don't really, I've seen news items that suggest that we import a lot of oil from Russia. We haven't really done that since I think 2014. So it's really strange. I think they might be looking at charts that are just old. Let me go through that first because I prepped that. This is actually who Russia exports oil to. So what we've really done is just improve pricing to the extent that we're lobbying for it. We've really, I'm sorry, that's nuclear reactors, my bad. Hold on, let me get this correct for you guys. Here we go. This is 2020, and this really didn't change much because remember, the U.S. is a net exporter of oil. I'm just saying. So this would be who Russia exports oil to. And as you can see, you're not really seeing the United States on here. And it kind of makes sense because remember, like I said, our price point is the lowest in the world. So if we're going to bring in oil, it just wouldn't make sense. Just wouldn't make any sense. So just want you to understand that for those that are still bullish oil, that's kind of the deal. And I think I'm starting to see on CNBC more folks talk about it in a way that actually is true to this ideas that we've been putting forth about the fact that it's not just the spot price of oil, but it's the commodities curve. It's not that anyone has a desire to try to force pricing up to force back into fossil fuels so that the environmentalists are all upset. That's not what's happening. It's actually the larger dynamic of the way in which energy policy has been implemented, more than one way to do things, that is basically driven down any possibility for investment in oil and gas that might even be considered profitable. We don't put a gun to people's heads to pump more oil out of the ground. It only happens in America if it's profitable to the investors. So we had created, okay, the back curve has come up a bit. We had created for an extended period of time, all the way through December, when Biden was begging the oil companies before any of this had gotten to a boiling point. Nothing has really changed. The only thing, well, the one thing that has changed is this spot price has gone up a lot, and the back of the curve is rising. It's still backwardated, which but it's high enough to where you might start to see some folks be like, okay, this price I'm cool with. I can actually do right by my investors, etc. Now, a lot of folks have come at me and be like, well, May, if these guys are so profitable and so whatever, then why are they giving money back to investors? That just sounds like they're gouging. I'm like, do you understand, like, the net energy policy is suggesting that our president would like to wind down the oil and gas industry? So yeah, they should be trying to be profitable with the assets as they are and return that money to shareholders so that they can reinvest in something else, be it alternative energies or whatever. There would have been, by the way, a way to do this same action so that the investor doesn't get brutalized and can reinvest into alternatives, and alternatives can rise over a capital spending time that actually makes sense. In other words, there is a ton of infrastructure that happens when you build there was an absolutely there was a way to do that without brutalizing Americans with an oil price that's higher than it's ever been. That just didn't seem to be like an option, apparently. And so now we're all living the realities of that. And that kind of is what it is. So, it's very unfortunate, but I don't think it helps anyone to pretend like embargoing oil from Russia for the United States legitimately does anything. It does not. It does not help inflation, and it does not change that the CPI number is going to show very aggressive, incredibly aggressive, and it's probably all going to come from oil and food, with some also additional areas in autos, because we definitely saw in the consumer number, even though the number was not listed for January because of the data transition that's happening, we saw an increase in auto loans. So, there is that. Now, that mostly is coming from the price of cars, from what I'm seeing. And remember, that number is really going to talk about used and new cars. So, anyways, something to note. Now, again, the other things that I really wanted to show today is I do want to do a little bit more on some things that I saw that were also kind of a misunderstanding. Now, I had talked about trying to find a way to really demonstrate that inflation was not the same in different places on the earth. And I found this from December 21. So this is from the IMF. So I had kind of felt that this was the case, but I've been searching around. I couldn't find it. Now I finally found it. This comes from the IMF. And I want you to just see the orange coloration is inflation that is 3 to 10%. It's very high. 25% is the dark orange. So as we get increasingly orange, the middle, we're about in the middle with 7%, even though it is painful. So you can get a sense for how bad it is if you're in one of these other countries where it's very dark orange, namely the Middle East as well. But I want you to see that Europe is, largely speaking, this light green, and China is light green. And I'd argued for a while that when I went over last year to visit France and Spain, that it was clear to me that China, through its Belt and Road policy, was helping them with the exports that weren't making it across the ocean because of our freight problemo here in the United States. And I think this map very clearly shows you that absolutely might be the case. So realize that as well. If we continue to push in an aggressive way towards China, and China's got this massive border with Russia. I mean, this is Mongolia and the such, but really Mongolia would just let them right on through, as far as that goes, because they got no love for the Chinese government. China's kind of in a pickle the way that things are going. This is Kazakhstan right here. This is where all the uranium comes from to help them with some energy shortage situations that they've got. China's in a really delicate situation. I just wanted to make it clear, though, that, again, this is the map that comes from this comes from Netherlands. They do some fantastic research, but this is from 2019. And as you can see, the light green areas at the time, China was a #3 trade partner. I'm suspicious that if they did this map again, that might have improved a bit during this COVID period, given where inflation happens to be, because I don't see how else they would have been able to post that. Additionally, realize that the embargo that we have done on oil and gas from Russia, that doesn't have the same impact as it might overseas. Now, it's always been the case that Europe's oil price is higher than the United States, but if you took the 30% of oil that Germany and other countries, 30 to 40, depending on the estimate you're taking, nat gas, oil, etc. So if you take that out, that's going to be very painful. That's going to be very painful from an inflation standpoint for this group of countries. Just want to make sure that that's clear. And I just want to remind people, I feel like sometimes people think that energy is like, there's some kind of ability to have Amazon Prime in the energy sector. Like, now we're going to have nuclear power plants. Now we're just going to bring them back online, etc. That's not how it works. You know what I mean? You got to get uranium, first of all, to have a nuclear power plant. Germany doesn't have any because they unwound all of their plants, and that was supposed to really go offline in its entirety either this year or next year. This is a really tricky situation that is happening, and the net folks that suffer the most are not the world leaders that are posturing, but the day-to-day person who's got to buy bread for their family. Again, we've got military soldiers that will probably supplement if it gets too aggressive. So I really just want to, I'm very neutral on a lot of things, but I do dislike misinformation or half information or information that is unclear for the populace to really just make their decisions. So that I just wanted to mention it and throw out there. Here again is what who matters. Ooh, I'm not sure why this is not working now. Oh, okay. Here's who the U.S. actually gets their oil from. It would be, first of all, again, like I said, we've done huge improvements such that we import about half the oil that we would have historically. And then, the rest of OPEC is now really, really small. It doesn't really include Russia anymore, quite frankly. It's going to include mostly Latin America because it turns out, if you'll recall from our map of who has oil to export, it's really Latin America. Unfortunately, it's actually Venezuela, who we have a terrible relationship with. Colombia, et cetera, these two countries, we do just fine as far as relationship goes with those nations. And then it's the Middle East, Saudi Arabia, et cetera, and they've been very clear that they're only given pumping more oil if we do certain significant concessions. Iraq and the rest of OPEC, it's a strange world we're living in, and we don't really help each other very much by not really telling the truth. Now, just to help with some of the other stuff geopolitically to be aware of, NATO is everything in blue. Green is also NATO. The UK is part of NATO, but is not. It should be orange now because it's an old map. So the UK and Norway are part of the EU, but are not a part of NATO. So these two oil-producing countries are not a part of NATO. Let's just be clear. Sweden and Finland, everybody's trying to drag them into this NATO thing. That's, and Denmark as well. That is something to be seen. Denmark is a part of NATO. Sweden and Finland are not. and it's just the degree to which these four countries want to spend some of their GDP to support military action should it escalate. And so there's a lot of like posturing that's happening for those that are the defense names and long defense names. I like Lockheed Martin in particular because of some of the really innovative things that they're doing long term to allow for various branches to be able to more effectively change out military instruments from Army to Navy, Navy to Air Force, Air Force to Marines. This is something that the CEO announced when he first came into office a couple years ago, and I think that that was really, really a smart way to do it in the future. So I prefer Lockheed Martin, and it does trade cheaper than some of the others that are out there. I also prefer General Dynamic because unlike having exposure to commercial, you will have exposure to, well, technically you have exposure to commercial, but you have exposure to high-end commercial because it's like G6, or whatever is the fancy plane that private folks fly these days. And she has had zero problem selling those planes in a world full of COVID, and given the expense that it is when you have a CEO that is quarantined for 2 or 3 weeks. So there's some of that too. In consumer discretionary, we're getting this really weird intraday rally, and we're just going to have wild times throughout because I do think that different politics is going to play in, different people's feelings are going to play in. Again, it is the case that we've talked about that this marketplace does have companies going into very strong financial shape. Okay, I've actually done this now for like 405 companies, so just ignore this visual, but it's still the case that about 2/3 are still doing exceptionally well. And then, the others, it's more about fixing the supply chain and making sure that they've actually gotten pricing that covers their cost. Now, I'm just going to say it one more time. The 3 companies that are most likely to not have the ability or have not raised pricing to cover costs are these 3. Dollar Tree already coughed up the quarter. They coughed it up because even though they raised by $1.25, the oil price has shot up so high that their shipping cost cannot be covered by that. And additionally, we're still trying to get stuff off the boats in LA, so that is a thing. Dollar General reports, I think next week on the 17th. I have no idea. This is like defying gravity because they got the same problems Dollar Tree does. It's not like they can raise pricing aggressively, and their particular consumer, even though they've been doing a little bit better, they can only bear so much. So these 2 legitimately do have some constraints on what they can do to navigate cost, to manage costs, manage the inflationary pressure relative to what they can get on pricing. Amazon, as you know, really choked hard on this last quarter as relates to operating expenses. People seem to, for whatever reason, love this because the cloud business, I get it, but the implied multiple on the cloud business is higher than any other cloud business for large cap like Google, Microsoft, et cetera. I mean, just look at the multiple. And then the consumer business is sucking 35% of that cash flow out of the cloud business. And, the increase in Prime was accounting for the increase in freight charges they experienced last quarter. It was not accounting for the increase in marketing charges that they were also showing or any kind of labor cost. Now, Christmas season is always a higher labor cost, so I'll give you that one. I'll give you that one back. But in fairness, these 3 struggle the most due to oil and gas prices. And so I continue, as I mentioned yesterday. Now, today is not the day to buy it because we got such a hard, dead cat bounce is what they usually call it, which I've always thought was a little bit mean to animals, but that is what they call it when the market bounces hard off the bottoms. But I want you to just keep these types of things on your radar screen because the market is so volatile intraday, you literally might be able to get it off in the morning and just collect it through the day. I'm not a scalper, I'm not a day trader, but I'm not averse to making money, okay? So this is just something to keep in mind, watch for, have specific prices and entry points that you're interested in, know the fundamentals, know where it just doesn't make any more sense, and find opportunities. And with that, I'm gonna hit the pause button. Any questions? How you guys feeling? Wild market, huh?
Yeah, news, McDonald's closed 850 stores in Russia.
Yeah, I saw it. They have the large. Thank you for letting me know though, because I don't always see things as far as that goes. I mean, they do have about. They do have about. Hey James, welcome to the show. They do have about 5% of their stores in Russia, so it's not insignificant. In fairness, the economy right now in Russia obviously not doing great. I don't think that the average Russian is exposed to the stock market, as so it may not actually matter to the day to day, but the other stuff that might be imported in, it's possible that some of that is quite a problem for them. And then in general, I just think it probably just makes sense for them to shut it down. It's the right call from a business
Yeah,
perspective.
from a sentiment point of view, I mean, it's very, I would say, noble. But I mean, there's a
Yeah.
lot of people, a lot of Russians that eat at McDonald's, as are everywhere,
Yeah, it is. It's
I mean,
the
that will bring the attention to Russian citizens who've been fed a bunch of false propaganda, right?
Yeah. I mean, in fairness, but all citizens across the globe right now are being fed false propaganda. So I don't think any one country is better than the others as far as that goes.
No,
You
I
know.
mean, in reference to the war in Ukraine.
Yeah. What is it that you feel like is falsely told to them, just out of curiosity?
Well, I think they're saying that it's all, they're being fed that it's Ukraine's fault, they're neo-Nazis, blah. I mean, you go on and on.
Yeah.
Um,
I
but
mean,
when something so close, to your way of life is shut down, I mean, you kind of go, well, what's wrong? What's really happening? And I
yeah.
think
I mean, I'm not convinced that that's going to
weakens Putin on a large scale. That weakens his position.
I'm not convinced that I'll do it because I think that most Russians have certain feelings about Americans, anyways. So they'll probably see it a different. I'm sure that Russia's got ability to spin this one. Um, you know what I mean?
Oh, so the Western U.S. is evil because we shut down McDonald's. Okay.
No, but that we're probably trying to play in their world in a way that is unnecessary. Do you know what I mean? So here, let me show you something. This is also what they're seeing. Okay, like if you're Russian, this is what you're seeing. You're seeing Estonia, Latvia, Lithuania all were not a part of NATO and then became a part of NATO. And immediately, as soon as they became a part of NATO, you had force integration units, you had a bunch of military go right over there. And just so you know, this right here is where St. Petersburg is. So as soon as these three countries joined NATO, NATO moved in a bunch of missile launchers directed straight at St. Petersburg, right? And now you got Ukraine here. So Ukraine wanted to join NATO, and that's going to look cosmetically a certain way because Moscow is about right here, 500 miles off of the border of
Right.
Belarus. But you can probably, but so if you're Russian, it's highly possible that you don't want a bunch of missile launchers off the border of Ukraine pointed at Moscow. So it's really hard to know what a Russian would be thinking unless you're Russian and you've got family that's Russian that could tell you very directly on a large scale. I think this whole thing sucks. To be honest, let me be careful. Let me
Yeah.
be very,
Sure.
very.
Yeah.
There's no part of this is great. All of this sucks. It's a failure in diplomacy because I hate that. The losers are the people of the Ukraine for sure right now. Suffering the way that they are. But quite frankly, all the border countries that are redirecting resources and the global resources that are going to try to support this whole situation, all of it sucks. It doesn't need to happen right here in the middle of where people should be planting and lowering the cost of food. It just all sucks. I don't know another way to say
Yeah.
it.
Could you repeat that? You said missiles are pointed at St. Petersburg, where
Well, these are
Estonia.
battle group enhanced forward presence. So if you're a military person, this is where you might have some deployment of military equipment on NATO, right? So this is Estonia, Latvia, Lithuania.
Right.
These are all now a part of NATO as
Right.
of, I think, so this right here is St. Petersburg. I mean, they could just be generally pointing them, or they could just be not pointing them at all. But quite frankly, this is where NATO moved in right away after these three became part of NATO for good reason. I mean, it's geopolitics; it is what it is. Relative to the size of this, Belarus has stayed very chilled out because they're really not trying to create any kind of circumstance. So they navigate probably the toughest situation on this border that anyone does. And they've been very adamant that they would like to see NATO, even though they are not a part of NATO, have more troops and really do better as far as military spending. And it's because of that, I think that Belarus wasn't ever vocal about joining NATO, because unfortunately, this big, huge border is real for that particular leader of that country. Ukraine, for whatever reason, has taken a different approach where they're screaming all the time to join NATO, and it always creates a certain circumstance that is not particularly pleasant. The Crimea over here, I'll have to get a better map. You can see would actually give them some ability to get to the sea, the Black Sea. I think that's why he keeps asking for it. But Moscow's right about here. I don't know if y'all can see I don't know if you can see my arrow, but it's right
Yeah,
about
yeah.
there. And it's a gigantic border. And I think that's why if Ukraine, so when his pipe got denied, I think Putin was really thinking, I mean, I don't know. It could have just been a lot of angry men with really big tempers in a room leaving instead of talking diplomatically. A potential, I don't know. I wasn't there, but a potential is that when the pipe got denied before Ukraine got denied entry into NATO, which would have been as simple as just saying, look, it's not going to be this year. Putin saw that as a possibility that Ukraine would come in, and that would allow into NATO, and that would allow military movement into the Ukraine. And so I think that's what invigorated him to try to preemptively do what he's doing now.
Wow,
Sorry,
that's
your original question was
valuable.
just what do the Russian people feel about it? Well, to be fair, I have no idea. That's way beyond
Okay,
anything I would know.
that's such a good. Thank you. That's very valuable information. Yeah, open-minded. That's huge.
Well, I mean, I just, this is horrible. War is horrible. Violence is horrible. I really would love to see a diplomatic resolution. I would love to see diplomacy take the day, because honestly, that is the best interest of every party, and it is in the best interest of the people on the ground that would necessarily get involved. And let me just be clear, it's the best solution for the fact that we literally just brought our men and women in the military back from some pretty terrible situations. Now, I'm not making comments on what's the right way to do it, what's the wrong way to do it, which I know is a trigger for a lot of folks. But it's American blood that actually goes in and fights these things a lot of times. And I'm not always looking forward to it. It's why I keep kind of harping on that. Sorry. But yeah, I would love to see diplomacy happen. The unfortunate truth is that if we go into that region, all we've really done is make Putin's worst nightmare come true, but not in the way that you might think of it, and you also force China to make a really aggressive call. Let me show you this too. This is why it's an aggressive call. Let me just look at this. So here, here's Chinese imports. The biggest thing they import is crude, right? And I just showed you how big that number is for China. They got 1.5 trillion in imports that they make, so they are a net exporter of all things except for this crude. And they're one of the major places they get that crude from is Russia. So if you're going to cut them off of crude, that's a problem for them. You know what I mean? And then they do have a whole bunch of wheat. Now, this they get from all over the place. The cheapest place they get it from probably is Russia, even though, there's also Southeast Asia. But Southeast Asia is more about rice. And in fairness, well, let's not go through the agriculture of China, because there's a lot to it. But if so crude and then nat gas, you can see refined petroleum. All this whole thing is just basically right. So if we can find a diplomatic solution, and not create a scenario where China is forced to decide whether it can, fuel its nation, or you know what I mean? Let me just pause there. Hopefully that was clear, and I don't have to say too much more.
Yeah, yeah. So you're saying Russia and China are in bed together, even though they do not necessarily want to be.
Yeah, they got to get that fuel from somewhere. China. He's got a big dream. Let me show you this too. So China went to coal in as early as September because they have throughout, they're trying to grow, they have aspirations, there's significant aspirations. That's its own separate conversation as far as things go. And again, like I said, my job is to try to report and provide some information that will be helpful to investments in the marketplace. It's not to take sides or any of that as far as that goes. China's mix is still largely speaking coal, but it leaned in because I think there's a whole series of things. First of all, the price of oil went up a lot this year. Second, they actually do produce some coal there, so it's going to be okay. They also stopped exporting fertilizer so that they could, just have it. That's actually happened over the last decade multiple times. Whenever they're trying to grow the economy and now grow the population now that one child policy is no longer. But they have certain aspirations for what they'd like that nation to achieve in the way of modernization and GDP growth. So there's that. So they somehow magically still come in below the United States of America as relates to oil consumption. Here's the consumption chart. China comes in at 14.01 million barrels. This is from 2020, so this may be slightly higher now. They have significantly more population than the United States, just FYI. We come in around 20 million barrels, which was interesting in that, at the State of the Union address, I couldn't understand, but it sounded like Biden was saying he'd increased production by 16 million barrels. I don't know what time horizon that is, but it's not quite enough. I don't know another way to say it because we use this per day, So anyways, now if it's 36 million barrels, hey, that's cool. We can start exporting because the world definitely needs it like crazy, but it wasn't clear to me what actually had happened. You can't, this one. This is nuclear reactors worldwide. Now, here's the thing. In the United States, we can't just put a nuclear reactor up because we have a lot of permitting issues and things like that. But technically, it only takes about 5 years. 5 to 7 years is usually what they say. And China, as you can see, has 51 of them. So, there weren't any nuclear reactors in Deng Xiaoping's time. Maybe they were building their first one when I was there in pre-2000. So just so you know, they have literally tried everything to create other forms, if you will, of energy, but it's just a very large population and a very big ambition that they have. So yeah, that's kind of that's a thing, so to speak. And also, I've talked about this entire time. I'm not convinced that the Chinese economy is posting the numbers that they if they're posting GDP growth that is the classic 6+ % that Xi Jinping likes, I think they're at the lower end at best of that. I think it's been a really tough couple quarters on that, and you can kind of see it in Baba's numbers. So it's a really bad time to try to, it's a really bad time right now to try to aggravate your supplier of energy and your supplier of food.
Yeah, good point. Good point.
It's terrible. This is a terrible circumstance that we're in globally. I mean, come on. I hope that, we're always hopeful. There are some really, really brilliant people that are involved in these types of things, and hopefully they prevail in finding elegant solutions. Any other questions?
You mentioned Amazon before. 2,700 was a pretty good level to hold.
Oh, thank you.
Fundamentally, do you see? I mean, say on a multiple level, based on their projected earnings, what would their? I mean, the multiple's 40 something, which is high. Where would you see a fair multiple?
See, I was originally thinking a market multiple, which would be significantly lower. And it's not that, but here's the thing, the cloud business, if it goes in line with a Microsoft or, I'm not even going to give Google, because Google is just undervalued right now. I have no idea why people are pouncing on Google like crazy. They don't deserve it. But let's say it's a Microsoft multiple of 30 times to the cloud piece of the business. Then you got that business at 30 times, which is 1/3 of the business. And you got the other part of the business at, what would you give it, 15 times, like a Walmart, even though it wasn't able to produce the results that Walmart did this last quarter? I'm not sure. So I really do struggle If I'm willing to give the whole thing a 30 multiple, you know, um, I don't know. I think the most I'm going to do is just lighten occasionally because this market is so volatile, and then just press it back on if it tries to rally. Just see where it keeps, because I think you're going to have, I forget what you call this pattern where it's just going like this, oscillating on a downward trend through earnings of next year. But I do think that because of the nature of this particular beast and also the nature of this particular animal, I think your oscillations will be quite big. That makes sense how I said it?
Yes, thank you.
Okay, yeah. And so for people that are still trying to understand and decode my crazy ways of saying things, options has many, many uses. It can be for a hedge, it can be to express an opinion in a levered way, or it can be what is commonly, or slightly uncommonly called path management. And when I think about path management, I have to care about how the things, like I do actually absolutely enjoy coordinating with a salty dog in the in the technicals market, like the folks at Gurula are. And what's happening there is, what is the shape? Even if I think, hey, this thing is massively overvalued, what is the path it will take to where is fair value? Is the question that someone like me might ask. And so if we're saying that from a fundamental perspective, it's valued here, but it really ought to be here. Is it going to go straight down like sometimes happens to these poor guys when they get clocked on earnings? Amazon actually traded up and then started to slide down. So the oscillation, which is basically little curviness along this line, just goes up and down. And so that creates different opportunities to both, put on exposure, which the way that we're doing it, because Amazon is so expensive, is to use mostly bearish put spreads, meaning that we're paying for them. So put them on, and then as the oscillation goes down to levels like David's saying, take them off, and then put them back on, and then take them off. So we've already gone through more than one of these where we put them on and then we lightened, and then David was like, I see 3,200 on the technical side as like a resistance point. And I was like, cool, if it goes anywhere near there, I'll start shorting it. So that's kind of one way that you can still express a longer term view on fundamentals, but use options to do it. We can, on a non-daily commentary, I'll try to do something that's more of a tutorial to describe that. It's a little bit on the advanced side for sure. I do actually think that the day traders, if they were to or the swing traders, if they were to lengthen out their thought process, absolutely are approximating this concept. They just maybe haven't verbalized it for themselves. They haven't really put words to it. But yeah. Any other questions?
I do not. Thank you, May.
Okay, cool. Good luck out there, guys. Take care. Bye.